Welcome to Factful Finance. Imagine this. You've been hearing a lot about decentralized finance, or DeFi, lately. It promises a world where financial transactions are faster, cheaper, and more secure, all without relying on banks or centralized institutions. Sounds too good to be true, right? Well, it might be. While DeFi offers exciting possibilities, it also hides some serious risks. Today, we're diving into the hidden dangers of DeFi that many people overlook. These risks can affect anyone who steps into this fast-growing space, from seasoned investors to beginners. Let's explore what could go wrong and how you can protect yourself. Before we dive deeper, a quick note: this content is for educational purposes only. Always consult a financial professional for advice tailored to your personal situation. Now let's break down the risks. First up, we have smart contract vulnerabilities. DeFi operates through smart contracts, self-executing contracts where the terms of agreement are written directly into code. The issue? These contracts can have bugs or coding flaws, and if they do, they can be exploited. Just last year, a DeFi platform suffered a $60 million hack due to a vulnerability in its code. This is a major concern because once the contract is deployed, it's difficult to change. There's no customer support team to call when things go wrong. Next, let's talk about lack of regulation. Traditional financial institutions are heavily regulated, but DeFi operates in a largely unregulated space. This creates opportunities for innovation, but it also opens the door to scams, fraud, and illegal activities. Since there are few, if any, governing bodies overseeing these platforms, users are left to fend for themselves if something goes wrong. Another risk to consider is liquidity issues. In centralized systems, liquidity is managed by the institution, but in DeFi, liquidity is provided by users through lending, borrowing, or liquidity pools. If there's not enough liquidity, it could become difficult to execute transactions or withdraw your funds. This is particularly concerning in times of market volatility when the price of certain assets can swing dramatically. And then we have market risk. While this applies to any investment, DeFi's volatility is often more extreme. Many DeFi tokens are highly speculative and can lose value quickly. The value of assets in liquidity pools can fluctuate, and since these platforms often deal with newer, untested tokens, the risk of total loss is much higher. Finally, let's not forget about security risks. Because the DeFi ecosystem is still in its early stages, it's a prime target for hackers. We've seen numerous examples of attacks, including rug pulls where developers disappear with investor funds, or flash loan attacks that manipulate the market for profit. So how do you protect yourself? First, start by doing your homework. Research the platforms and smart contracts you're using. Are they audited by trusted third parties? Are the development teams transparent? Next, consider using DeFi platforms with more established reputations and be cautious with newer, less proven options. Always use strong security measures like two-factor authentication and avoid keeping large amounts of crypto on any single platform. In summary, while DeFi presents exciting opportunities, it's essential to be aware of the risks. From coding flaws to security breaches, there are dangers at every turn. However, with the right knowledge and precautions, you can minimize your risk and make informed decisions in this rapidly evolving space. What's the first step you'll take to protect yourself in DeFi? Let us know in the comments. If you found this video helpful, be sure to hit the like button and subscribe so you don't miss out on more insightful content from Factful Finance. And if you like what we do, why not click the bell so you stay up to date on everything that could help you with your financial goals. Thanks for tuning in today, and we think you'll find the next video helpful as you continue your financial journey.